What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Thursday market open live stream, and hope you all are doing great. And we've got lots of stocks pushing higher pre-market. We got Oscar jumping here over 8.8, almost 9% on earnings beat and a slight revenue miss. But the stock is pushing back up to over $18.53. It's up almost 9% right now. We got Tesla up over 33 basis points, and Iron is also sitting at a brand new all-time high, up over 2% on the day so far, trading up to over $78 per share. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure the audio and video is good, and then there are no problems, technical issues, so just give me a thumbs up, and we should be good to go here. Good morning, everybody. Thank you so much for joining. I really appreciate it. And Ethereum, once again, seeing a little bit of a pullback, trading back under 3,400. And Bitcoin here is sitting just over $103,000 as well. Volatility is back in the 17s. It has been quite a volatile market where we are seeing a couple VIX spikes and then the VIX gets crushed right back down. And so right now we're sitting at just a little bit under 18 right now for volatility. And of course, very, very important levels closer to 14 to 17. And on the higher end, we're looking at 29 to 30 as a very important level for the VIX. And like I said, QQQ's pushing up over 24 basis points after yesterday's rally, and S&P 500 also pre-market seeing some nice momentum. The question is, are these support levels going to hold up? Are we going to see buyers step in once again today after the big sell-off on Tuesday? And are we going to get back up to all-time highs, or if this is going to lead into some selling pressure in the month of November? So listen to the earnings call now. Lots of positive news, even in the face of the government shutdown. That's great. And yes, we are seeing Oscar pushing higher very, very nicely, up over 8.2%. You know what? I'm just going to bring up my options portfolio as well. Just so everyone can see the gains or the losses, whatever is happening on the day today here, and we'll take a look at it together because Oscar is a part of the options portfolio as well. So I'm just gonna bring it up here. Just give me 1 second, and we should be all good to go. Let's do this. And 1 second. All right, let's do this. Here we go. So this is what it looks like. Of course, I do have a lot of positions in Bitcoin, Ether, so BITX and Ethereum. We got HIMS, Iron. Iron, I do need to roll, it looks like, again, because right now I do have the November 22nd $75 call that is now back in the money. It was in the money up until like even yesterday. You know, Iron closed at 77. Right now it's at 77.70, just a little bit under $78. Then of course I've got Meta. Then I want to add more position, more shares to Nvidia, and then of course Oscar is pushing higher as well. I do have the $20 calls that are still out of the money, expiring in about 1 month, so December 2nd. And these calls, of course, were higher up until yesterday. They are going to pull back a little bit today, but this is going to be the 600 shares at around whatever that cost basis is. I forgot what it is, around $17, $18 for Oscar. And of course, Palantir, SoFi, and Tesla also part of the portfolio as well. So let's take a look at some stocks here. And what are your thoughts on Elon's pay package? Will he get it? I think he will. I think the decision is going to be most likely in favor of the pay package. I think it's been approved. You know, whenever we've gotten these shareholder votes, it's been approved 2018, 2024. And so I do believe that I think shareholders are going to approve because this is, again, beneficial and good news for, you know, a lot of investors in general. I think, you know, it's a compensation package based on many hurdles and milestones. And I think this is not just, you know, that Elon's going to get paid regardless, but he needs to contribute. He needs to provide a lot of value, and he needs to get Tesla to that scale. And only then, you know, he's going to be awarded this compensation package, right? Similar to what we've already seen from back in 2018. And of course, I read over the entire shareholder letter and what was mentioned in that shareholder letter. Of course, it was billions back then, and now we're talking quite literally trillions. And so I do think that there's a high probability that it does get assigned or awarded, approved. So, okay, as a long-term Nebius and Iron shareholder, I do prefer Nebius here. We'll take a look at Nebius and Iron. Iron is pushing higher very, very nicely pre-market, getting up to over $78, almost $78. And if you take a look at Nebius right now, pre-market, it is also higher, 3.6%, getting back up to 121. We got support at $87, $88, and a resistance up to as much as 141, 142. Iron, on the other hand, I think it is a stock that is just at the right place at the right time, apart from their crypto mining, the data center, and providing AI compute. Especially having a significant cost advantage is huge for Iron because of the renewables, and of course keeping their costs really low is one of the reasons why on a mid to long term basis, we're talking 2 to 3 year basis, Iron has tremendous growth potential in that time period. And of course, what happens 3+ years out is anybody's guess. But that's when a lot of leaders in AI are expecting for the equilibrium for supply to catch up to the current demand, and for us to get up to an equilibrium where we could be matching the supply and the demand. Right now, of course, demand clearly outstrips the supply for compute, and as a result, there is really high prices and high demand for this business, and that's why a lot of companies are spinning up data centers, AI, cloud compute. Whoever has hands on NVIDIA GPUs can build data centers and provide that service for a lot of small, medium businesses and even larger corporations as well. So morning, was able to buy Axon dip yesterday and got in 572. The stock will be back in 700s in no time, George. That's incredible. Axon has been part of the shopping list, and also it's a stock that I covered not too long ago. 556 is where it dropped down to. Looks like you got in around the 572 level. It's already back up to 642. So lots of buyers stepping in yesterday. So Axon, in my opinion, is indeed a fantastic business to definitely keep on your watch list. And of course, monitor those buy targets. It is, like I said, part of the shopping list as well. So I think it's going to be a pretty good stock to keep on your watch list for buying opportunities. Of course, build your own story, build your own thesis, and have your own conviction level before you enter in. But it's really, really good business. Is Fortinet at a good valuation after earnings? We'll take a look at that here in just a minute. Can you please go over Novo? Thanks. I don't understand why shareholders wouldn't vote for Elon to get this package. 8 trillion is better than 1.5 trillion. Totally agree. I think that's a significant jump in valuation, a massive gain, for shareholders over the long term in terms of total return. So it would be a no-brainer for shareholders to not approve it. Just it is what it is, right? So it's basic math, and I do believe that overwhelming majority is voting in favor of this pay package. So coming over to Novo Nordisk, it's been on a downtrend of lower highs and lower lows. So this right here is the entire chart within which it's been trading. So this is the entire downtrend here. Very strong support, down as low as $45, $46. And of course, a resistance right now back up to $59 to $60, but it's still very much within the context of a downtrend. So Fortinet reported their earnings. Looks like we got a very strong beat on both EPS and revenue. The stock is plummeting a little bit, over 11% or so. Let's see, weak Q4 revenue outlook. So forecast revenue below Wall Street expectations here. And Jeffrey sees Fortinet's decelerating growth as a concern, noting the company's lowered fiscal year service revenue outlook and its revised recovery timeline now expected in the second half of 2026 instead of fourth quarter of 2025. And you've got a hold rating on the stock with an $86 price target. Q3 revenues of $1.72 billion, beating expectations of $1.7, and adjusted EPS came in at 74 cents versus 63 cents was the expectations for the company. So again, it's really just tumbling off of weak guidance here. The company expects fourth quarter revenues to be 1.83 to 1.89 billion, with the midpoint slightly below expectations of 1.88. I mean, this is what I'm talking about. It's stupidity. And Analysts are expecting 1.88 and they guided for 1.83 and 1.89. So even if you were to take the midpoint there, we're talking what, 1.85, 1.86 as the midpoint. So they're off by, it's insanity. That's what it is. I mean, 860 million versus 880 million. So we're talking what, 20 million off on the expectations, and the stock plummets 12% on this guidance miss. I mean, that's Wall Street in a nutshell. That's what it is. The smallest miss can result in a massive overreaction. So I might actually consider selling some puts on Fortinet today. We're looking at around 70, 71 bucks as a CSP on Fortinet. So that is what I would be looking to do. So right there, we're talking about a support, $72, $73. And of course, a much stronger support is going to be all the way down here at $46, $47. And another support down here at $54. So yeah, $70. I'll be looking at a potential CSP for next week. Mark says, November correction for Tesla. As many say that after the package is approved, there is a chance of a sell-off. Yeah, it could be buy the rumor, sell the news type situation. I know that a lot of institutional investors, including the Norge, Bank Sovereign Wealth Fund of Norway, is voting against this package. So if it gets approved, there is a possibility that we do see a little bit of a sell-off. But I think long-term, it's still going to be beneficial for Tesla and for the shareholders as well. How about Meta? Did it find a bottom? Well, it is validating a very strong support, that's for sure. So if you come over to Meta, on the daily time frame, we got a nice little green candle coming in, pre-markets pushing back up to 640. So I do believe that this is a strong support at 625, 630 for Meta. And we're starting to see a nice little potential recovery there. My plan with Meta is to continue to accumulate some shares, 5 to 10 shares here and there, and to then eventually get up to about 100 shares and then start selling some calls. That's going to be the plan for Meta right now. Of course, I don't want to, buy all the 100 shares right now. I want to slowly and steadily build that position for Meta platforms. Okay, good morning, everybody. Good morning. Turn my cardboard box into a mansion in exchange for the pool house of my mansion. I'd rather live in the card box, have majority ownership. Yeah, Trade Desk, we'll take a look at thoughts on Duolingo. Sold Tesla, best thing I did, and Palantir in January 2024. Not so, but I needed to sell for personal reasons, but didn't re-enter after new tax year when the VIX was high. Love Nebius, they have more AI cloud, Russell says. Yeah, I think with both Palantir, Tesla, Nvidia, those have been the hottest names in the market, and they've obviously been some of the best performing names as well. And you can have a long-term investing portfolio, and then you can have a trading portfolio or an options trading portfolio as well. But I would always recommend keeping those two separate, so that you're not mixing your positions and you have a very clean, separate, segregated portfolio for those two. Because if you want to be a completely buy and hold passive investor, that's also fine. You can have just one portfolio for long-term investing. I know that a lot of people just want to trade stocks. They just want to be getting in and out, swing trading, options trading. So they just want to have that portfolio. But if you are somebody who likes a more balanced approach like I am, I want to invest for the long term, but then I also have itchy fingers that I want to trade with. So that's when, you can have those two separate, completely distinct portfolios with different strategies. And the thing is that, there's no one better than the other. Long-term investing, you can do 20 to 25% per year or higher. Of course, contingent on what stocks you're actually picking, and again, the overall state of the market and the environment that we're in, and with options trading as well. It's possible to do 15, 20, 30, 40% per year by selling options. So there's no one right or wrong. It's just a way of diversifying and, of course, catering to each risk tolerance and strategy for each investor and trader. So, all right, Trade Desk, let's take a look at. We have talked about Trade Desk. Again, yesterday we briefly touched on it. I mentioned that 2026, 2027, I think a couple of years of earnings contraction is what's causing Trade Desk to perform poorly. Year to date, the stock's down almost 60%. So the story behind Trade Desk, I do believe, can start in 2027. 2028 when the earnings start to reaccelerate and there is growth back in the business for Trade Desk. Same plan with Meta. That's great. Perfect. Let's take a look at LAC. So Lithium Americas Corporation. Looks like it is going to be a pretty small company, just about $1 billion in market cap. And we're starting to see a significant pullback here with a massive gap fill for LAC as well. So I would put down a support for the stock right about there, closer to $4.10, $4.11. That would be a support level. Of course, it is quite oversold right now. And we're seeing a nice little recovery pre-market. So that's going to be that resistance closer to 510 for LAC. MP Materials. So if we take a look at MP here, also been selling off quite aggressively from its highs of 99, close to $100. And I would pin down this support around $48, $49 as a pretty strong support level for MP Materials. And this is going to be turned into a resistance again, since we are starting to see a little bit of a breakdown below this stock. So resistance, $61 to $65. That's the range within which, of course, it's been getting rejected, and a very strong support inside this green rectangle between 45 and 51 for MP Materials. Okay, let's take a look. Google here. So Google pumping up at 1.4%. So very, very nice move. It's been trading near all-time highs on the back of, a lot of partnerships and, of course, good earnings as well. And so support level is going to stay put at 257. On a shorter time frame, you could argue that Google has validated this really good support right about here at around 277. On the 1 hour chart, it's been validated a couple times. We're starting to move back higher. So those right there are going to be 3 levels to watch for Google. 277, 257, and 239 for Google. Okay, let's take a look at Oscar. We already covered. Oscar up over 10% pre-market. I have $15 CSPs in our trade alert channels. We'll see if those print today. They will print, right? Oscar is already pushing higher, 10%. Cash secured puts are going to absolutely rocket higher today. And of course, it's now more out of the money. So those are, depending on the expiration, are most likely going to be up a lot. And I've got covered calls at $20, which are still out of the money, expiring in 1 month. So I'll see if I need to roll them out to a little bit out to $22, $23, or if they still can expire worthless and out of the money. So that's going to be the plan with Oscar right now. Looking at BMNR. So again, a lot of BMNR, BITX, a lot of these are going to be crypto related stocks. So I really want to once again mention caution. If you are somebody who's trading or investing in these companies, just understand that you're really buying crypto in a way, indirectly, because BMNR is going to be trading on Ethereum, BITX is going to be trading on Bitcoin, and even leveraged 2 times. So if you don't understand these and how they work and how they are created, I would stay away, right? I would definitely stay away from anything crypto if you don't understand or don't believe in crypto, over the mid to long term. And it doesn't have to be like super crazy conviction, to the levels of MicroStrategy where you're just plowing money into Bitcoin or Ether. But even if you do believe that, okay, there's a little bit of diversification there, it's an asymmetric bet, then less than 2%, less than 5% of the portfolio can make sense, right? So, as we already heard, like Tom Lee talking about $1 million for Bitcoin, $20,000, $30,000 for Ether long term. Those are some crazy numbers. So, so if you believe in that, then of course we can diversify a little bit into those. Okay, BMNR we went over. Duolingo we will take a look at. And again, I'm going to try to cover as many companies, as many stocks as possible. All I'm asking in return is drop a like and share this live stream with as many people as possible, because if you are putting in tickers in the chat, you better be liking this stream if I'm covering your stock. So we only have 50 likes. We've got over 340 people watching. I want to get to at least 200, 300 likes so that it can get to more people. We can have a more engaged discussion and, of course, have a pretty good data set of understanding of what everyone feels about the market and, of course, for individual stocks as well. So we really appreciate that. Thank you so much. And let's take a look at Duolingo, and then we will jump into some other names. A few more names before I start talking about the market here. Okay, DUOL has been selling off quite aggressively here. It starts to feel a little bit more of a head and shoulders right about there. As you can see that it's been in this left shoulder, big head, right shoulder, starting to potentially break down from this neckline. And if it does, I'll keep a close eye at support of 239 down to as low as right there at 173. So that is going to be those two support levels to watch for Duolingo. So American Battery Technology, just under $500 million of market cap for this stock. And of course, huge parabolic run up from 230s to $11, 416%, only for this pump to fade, 66% crash for the stock. And I would keep a close eye at this support right about there at 385. See if that level gets validated. Incredibly oversold stock, obviously. But if it does break down further, then I would be watching this level right here, closer to 280 for ABAT. That's going to be the two levels to watch for Applied, for what is it? American Battery Technology. ELF, we will take a look at very quickly. And let's see what this company is doing, ELF Beauty. A lot of consolidation sideways on a weekly time frame. It was in a nice little uptrend, but then it broke down. It was on a nice downtrend, lower highs and lower lows. Recovered a little bit, got rejected at the same exact resistance as it has previously, around 142, 143. And it's now starting to roll right back down with a support which I would mark out around $98 to $99. So that is going to be that support level to watch for ELF. So that's going to be that level. Resistance right now, it's getting rejected around 142, 143. Let's take a look at SoFi. What is SoFi doing? SoFi back up to over $30. This has been one volatile stock, and resistance all the way up to as much as $30 to $32.50, $32 per share, with of course a very strong support inside this green rectangle around 24 to 25 bucks for SoFi. Of course, volatility stays around 18. Oscar pushing higher, continues to rally up over 10%. Tesla slightly down to 460. Tesla really struggling at the 470 level. I mean, it's been flirting at that price. It's been giving us false sense of hope for the last 3 weeks, 4 weeks. In fact, I think since 2 months. So 8 weeks of trading, and it's been just giving us, it's been teasing us. Gets up to this 469, 470 level only to get knocked right back down. And is just struggling to break out, which is good. I'm not complaining. I've got $500 calls, and the last thing I want is for Tesla to blow past 500 and to put me in the money. And I only have 1 more month to go. Tesla, you've been trading sideways for 8 weeks. Just give me 4 more weeks, and I can close my calls, and then you can rally to the moon. You can go to $1,000. I wouldn't care. Just 1 more month. Do not trade up. Do not break outside of 470. Yeah, consolidation at these levels is a good thing. What happens if Tesla goes to 1,000? Do you have to roll it out for another year? I don't have to, because my expirations are for December. Just 1 more month. I just got to hold out 1 more month, and then I can close my $500 and $600 calls for profit. Huge premiums, by the way, that I collected earlier this year. Sold them way out of the money, and of course, expirations were at the end of this year, and then it can go wherever it wants. It can go to 800, 1,000, 8 trillion the next year. It's fine, but I do not want to be capped right now at over 500, 600. So yeah, consolidation for Tesla at these levels is a good thing. I agree. Presumably, Tesla might break out if a good result tonight. True, it's possible. I mean, it's not that far off, right? I mean, from 500, it is only 8% away. And knowing Tesla, 8% is 1 day's worth of work for Tesla. So if with the announcement, we'll see what happens. But just needs to give me 1 more, 1 more month. That's it. With the amount of levers Hood is pulling, I think Hood is definitely a buy. Yes, so Robinhood is, of course, a very strong growth company. I totally agree, but valuation, of course, do matter all the time. And, what price you're paying, the price is what you pay, value is what you get, right? One of the best quotes from Warren Buffett, and makes so much sense. And that's what every investor and trader has to analyze, right? In my previous live streams and videos, I've mentioned that, if you are already invested in a certain company at a lower cost basis and you've got a big position, if you're adding to your position without denting the cost basis, and you're just kind of building a bigger position, you're kind of sizing up, doing more accumulation, even at sky high prices. If it doesn't move your cost basis, that's fine. I mean, it's something that can be considered. But if you are a brand new investor in a stock and you're already looking at pretty sky high valuations, maybe you want to reevaluate and maybe look for, selling puts first or accumulating a little bit at lower levels, because the price you pay is what's going to determine your future return. So for me, I think Robinhood 120 makes for a decent starter, but I would love it in the less than $100, right? So in the 90 to $100, which could be a price point I could see myself, getting more of Robinhood. It's going to be a 30 to 33% sell-off from where it is right now. And the market cap's about 126 billion. We're looking at about $3 billion of revenue. So, it's a pretty expensive stock, right? 40 times sales. It's high. 40 times sales is quite crazy. So, Jack, good morning. Any thoughts on ZS versus Fortinet to bolster security as picks and shovels complement? So I do like both of them. I'll be honest. I think Zscaler and Fortinet, I have both of them in the shopping list, as well as CrowdStrike. So, for Zscaler, I would say a support level at 260 is pretty strong. Previous resistance, of course, it was consolidating sideways for a long time before finally breaking out, retesting this level, and then, of course, now it's trading almost near all-time highs. But Fortinet, we were talking about earlier, and I will be looking at some CSPs today. I think $70 CSPs make a lot of sense. It's down 11%. If it does sell off further, then we've got another support down at 54. And just for fun, let me just go over and see where the light buy, heavy buy is for Fortinet. So we've got $77, so it's already below the light buy. Heavy buy is $70, and then we've got a no-brainer at 55. And again, I think it's a bit of an overreaction. We're talking about a $20 million miss on guidance, beat on EPS, beat on revenue, very strong margins, and a profitable company with great balance sheet. $55 is going to put us at 21, almost a 22 times earnings multiple for Fortinet. So I think today 11%, I would argue, is a bit of an overreaction for the company. We're looking at 287 as a earnings per share for next year, right? So 287 over 263. We're looking at about just under 10% growth year over year. And for the stock right now, 76 divided by 287, we're looking at 26 times earnings. So, I mean, the stock is already at 26 times earnings pre-market. Of course, if it comes down to 55 or lower, arguably at 46, 47 is going to put us under 20 times earnings, which I think would be a crazy, crazy price point. Oscar just hit $19. Looks like Caddy will be rolling his calls. Well, not yet. It has to break above $20 in order for me to roll. I haven't even broken a sweat yet. I don't think Oscar's getting up to $20 today. It could possibly over the course of November. But if it does, I mean, I have been rolling options in this portfolio for what now? Like 16 months, a year. I have not let go of my NVIDIA since the beginning of this portfolio. I have not sold a single NVIDIA shares. I have not been called away, even though I've been in the money more times I can count. But I'm still holding on. The day they get called away from me, I think that would be a day to celebrate too. But I have yet to sell a single NVIDIA share from the beginning of this portfolio since I started accumulating. So I've just been rolling. I've just been rolling. So Gary, when I do roll, it does cost some money or the credit pays for it. We do it for a net credit. We always do it for a net credit. So I always roll for a net credit. And eventually when the call expires, and a lot of times it expires out of the money, then we get to keep the 100% of the premium, right? So we collect 100% of the premium and then we get to keep the shares as well. But yeah, right now, I think I have to manage my BITX calls, my HIMS calls, my IRON call. NVIDIA is going to be, 170 to 187 days. So we're talking, January and then September. So 71 days and 316 days. So one is going to be in about 2 months. The other one's in, farther out. And then, of course, I've got the Oscar calls next month, SoFi, and then Tesla as well. SoFi is going to be also the same as NVIDIA. September 2026 is where we're at. Keep rolling. Have you gone over Meta? Yes, we've already gone over Meta. And Meta, the plan is really to accumulate slowly and steadily and get up to about 100 shares and then start selling calls. Meta options, of course, very juicy, very, very good in terms of premiums. And the goal, again, like I said, is going to be to acquire more Meta, 5 shares at a time, and then start selling calls. So hope you all are ready for this market open. And tomorrow, make sure that you join us at 9 a.m. Eastern, because I'm going to be cutting the cake live in front of all of you guys, celebrating another year in the books, another year over. I'm heading into my last year in my 20s, so it's going to hit me hard tomorrow. That a year from now, I'm going to be 30. Of course, tomorrow I'll turn 29, but I'll be heading into my last year in my 20s. So, starting to feel that back pain for sure. And so definitely do join us. Yeah, your back is going to be suddenly sore. It already is, man. It already is. I'm starting to feel that. 30 is the new 20. Yeah. You're a spring chicken. Yeah, so definitely do join us tomorrow, 9 a.m. for the birthday celebrations. I would really appreciate that. It's something that I do every year. I celebrate it with our community, with all of you guys, with all of our members, because it's one of the many things that I'm very grateful of every year, is what we've built, the community, the members. A lot of you guys have become really good friends. And so you're about 6 months older than me. I'm 28 now, Rakesh. Perfect. Awesome. Yeah, 6 months. Yeah. But we do have a lot of November birthdays, right? So we have a lot of people in November. Getting old beats the alternative most days. Happy early birthday, my friend. Thank you so much. And again, we're going to have a good time tomorrow. I'm going to order a cheesecake, celebrate it with all of you guys. Maybe we'll watch the live stream from last year as well. I just remember it was right here. It was a good one. So, all right, market's going to open in about 10 minutes here. Bitcoin, Ether trying to recover. Crude oil is back under $60 a barrel. We're starting to see a little bit of a pullback here, still within the context of a bit of a downtrend. So, lower highs and lower lows continue for crude oil. So that is the overall downtrend there. And then this is where we are for the markets. Let's see if we can pull up the interview from Tom Lee. So let's talk about this. Let's play this, and then we'll come back to market open.
All right, we'll check out Bitcoin because that's rallying more than 3% after dipping below $100,000 yesterday for the first time since June. So what does today's bounce back mean for crypto and for the broader market? Joining us now is Tom Lee, Fundstrat Head of Research and CIO and a CNBC contributor. And Tom, it's great to have you back on.
Great to see you.
So let's start right there, because we did have a bit of a bounce back here in Bitcoin and really across the crypto landscape today. But yesterday, as Katie Stockton over at Fairlead pointed out, Bitcoin broke below its 200-day moving average. I know she's watching some technicals there pretty closely. How about you?
Yeah, I mean, I think it makes sense to watch the technicals for Bitcoin. As you know, Bitcoin is very sensitive to market liquidity and also perceptions about risk appetite and risk premia. And, over the past couple of weeks, I think there have been headwinds building, right? From the government shutdown to a hawkish Fed cut that was done last month and uncertainty about December. And as you know, with the shutdown, Treasury liquidity, the Treasury general account's actually been building cash. So I think all of these created a cascade of problems that put pressure on crypto. But hopefully, as you know, headwinds become tailwinds when you can resolve these things.
Yeah, I want to hone in for a second because I'm not sure we've been talking enough about it, but that funding stress we've seen in SOFR, I know there was data that was put out on Monday showing just a huge drop in that secured overnight financing rate on Halloween from the day before. Should we be paying closer attention to that and what that's meant in terms of the liquidity picture across asset classes?
Well, people definitely pay attention, Morgan, because one, as you know, that can often be an early sign of stress, but it also takes place when there's window dressing. So and banks are doing window dressing at the end of months. So I am kind of watching it, but I think those funding stresses have eased. And of course, it hasn't spilled over and reflected in what should be building stress in either credit markets or in bank equities. And so I would just say that it's an anomaly and it may be due to the shutdown, but yeah, it's worth watching.
Okay. Just the fact that we have had this deleveraging event, if you will, in Bitcoin. I mean, what do you watch to know that that's washed out? And I guess perhaps just as importantly, has this been playing out the way it has previously in the market?
Yeah, in some ways. I mean, I think we have to go back to two different episodes, 2022 when FTX collapsed, and then in 2020 when we had the COVID shock. And in both cases, those were really widespread deleveraging events in crypto, because as you know, in crypto, there is typically a lot of leverage. The October 10th deleveraging was the biggest in history. And that means there are still ripple effects being felt even 2 weeks later. There has been a DeFi protocol streamer that actually reported a pretty sizable loss, and that created further ripple effects. And that's what happened yesterday, along with this thing called the balancer hack. So I'd say it's probably still a couple of more weeks. The good news is there aren't a lot of bodies floating to the surface, so it doesn't feel systematic, but it's going to take some time for confidence to come back. And I think that's why crypto took it so hard in the last couple of weeks.
Got it. So what's the read-through to stocks, specifically the QQQ or the NASDAQ 100? We know there's always been this very strong, or in more recent years, a strong correlation between the two.
Yeah, and the linkages are growing because, as you know, like market makers actually trade both products. And I think in general, people get nervous because part of it is stocks have been up 6 months in a row. And we have to keep in mind that in October, we had the wobble in the first half before markets found their footing. I wouldn't be surprised if people are just pausing here and saying, look, we still have the shutdown. We've had 6 months in a row, stocks are up. Markets are overbought, and they get a little nervous. But let's say that just means a wobble in the first half of November. Since 1928, 100 years of data, when markets have been up 6 months in a row, 5 or 6 times you build on those gains with an average gain of 3%. And in 1936, the market was flat. I'm sorry, 1942. So in other words, you either have a flat November or actually strong. It's actually a good sign we've been up for 6 months in a row.
Okay. Given all the focus there's been on stretched valuations, particularly tied to the AI trade, do you anticipate here then into the final weeks of the year that we're going to actually start to see this broaden out a bit?
Yeah, it makes sense. I think, we are doing more Zooms with institutional investors where they're talking about not 2026. So they're trying to position. And I mean, part of me would say, I think the Mag 7 and the AI stocks are still reasonably valued because they're growing at more than double-digit growth rates. And even NVIDIA, the biggest name and most important stocks, only at 29 times forward earnings. So they're not demanding. But there are plenty of stocks that have underperformed for 3 years, where their underperformance is so severe, you haven't seen it in 50 years. And so I think there is going to be some folks looking to buy mean reverting ideas. But I'd still say I like the AI. I think there's a lot of visibility, and I think companies are starting to see payoffs. So it still makes sense to stick with it.
So there you go. A little bit of uncertainty expected from the markets in December, but overall, of course, bullish on crypto, bullish on the markets, as Tom Lee always is. Alistair, we already covered what Elon's pay package is gonna mean for Tesla stock, for today's announcement. So I do believe, like I said, it has a very high probabilities of getting passed and voted in favor. And as far as Tesla stock goes, I think long term that's beneficial, but short to medium term, we can't really predict how market's going to take that news, because I know that some institutional investors were kind of voting against it, and if it does get passed, they might see it as a key man risk and might want to liquidate or exit some of their positions. So it's kind of hard to say exactly how Tesla stock is going to react to the news if it were to get passed versus if it weren't going to pass. So all in all, I think long-term Tesla's trajectory is strong. It's still one of the fewer companies, handful of companies working aggressively on physical AI, autonomous driving. And so these are massive markets, as I've mentioned before already, that has the potential to, really just grow Tesla's business and valuations over the long term. So that's where my thesis and my thoughts are. All right, everyone. So market's going to open in about a couple minutes here. And again, thank you so much for the birthday wishes. It is tomorrow, so 9 a.m. clock in. We're going to be doing a little mini celebration to close out the entire week. So again, thank you so much already. And tomorrow we'll celebrate just for a few minutes together. I would really appreciate that. And again, I want to share my gratitude for all of you. Another year, as I said, in the books. Okay. So QQQs are slightly down or basically flat. We've got S&P 500 also down about 11 basis points. Oscar pushing higher over 8.6. Couple plays that I'm looking at for today are going to be Fortinet CSPs. They do look pretty interesting given that Fortinet is dropping, quite aggressively pre-market here. And then Oscar calls I do already have, which I'll see if I need to roll them if it does breach $20 today. If not, then that's great. They're going to stay out of the money. And then, of course, Meta Platforms, I will continue to accumulate slowly and steadily, as I said, for this stock. So thank you so much for joining, everyone. Have a great Thursday morning. Any questions, email me at admin@moneyvest.com, and I'm more than happy to help you in your journey. We've got a lot of members in our community just ready to help support each other. That's what I feel makes this community so special, is because we are genuinely interested in helping you. This is what we do for a living. We live and breathe the market, right? Stocks, options, real estate, a lot of different investment opportunities, and we are here to guide you, through our mistakes and our strategy and everything that we share. So definitely, drunk Karthik's gonna be awesome. I'm not gonna drink and trade. That's not gonna be me. But thank you so much for joining, everyone. I really appreciate it. Again, link's gonna be down below if you're interested in joining. Have a great, fantastic Thursday. I'll see you all in tomorrow's live stream. Don't forget, tune in at 8:45 a.m. for a little mini celebration as well. Thank you so much. Happy investing.